First and foremost, when you have money, invest the money. And if you are having a salaried income, allocate 32% of your income into systematic investment plan. Till 1996, the highest salary in India for a managing director was only 6,000 rupees. There was a cap on managing director salary. Then I became CEO of another company and I was there for a very brief period of about 14-15 months. The salary went to 18 lakhs. It took a long time to create 1 crore wealth. I think it was in the year 2000. After the Ketan Parekh scam, I realized that I had 1 crore rupees. There is a phenomenal growth from what I started. When I used to go for investor awareness program once in Coimbatore, one of my taxi driver, he said, I listened to your lecture, sir, now I want to invest. He started with 500 rupees. Those are the investors I want to really help to create wealth. And even today, he's continuing SIP.
Welcome to Money Skills by Scripbox. I'm Karthik Anand, and joining me today is Mr. AK Narayan, who's a capital markets specialist with over 3 decades of experience in wealth creation and financial planning. He's also the author of the book, How to Invest Right and Prosper.
Thank you for inviting me to be with you this afternoon.
Could you tell us a little bit more about your childhood and education?
Most of the time I have spent in Neyveli Lignite Corporation Township. That's where my father was working. So I did my schooling there. Like anybody else, I used to take a lot of interest in playing cricket and other games. Then later on, I moved out to Chennai to further my studies, and I did my CA also in Chennai. After that, I moved to Mysore and then to Coimbatore before again coming back to Chennai for work.
Speaking of, what was your first job and what was your salary?
I think it was in the year 1982. I started earning about 1,000 rupees as my salary, and it continued till 1987 when I moved to another company. And at that time, it was at least 4 times 4,000 rupees or something was my salary. 87. Then in the year 89, I moved to another company that became little more higher, 50% more, maybe about 5,000 rupees or 4,500 rupees or something like that, till about 96 or 97. Then the salary structure was going up rapidly. You may be knowing, I don't know, till 1996, the highest salary in India for a managing director was only 6,000 rupees. There was a cap on managing director salary. Up to 1996, it was 6,000 rupees. Only in the year 96, it was relaxed. So after 96, the salary levels went up for everybody. And I was not an exception to that. So the year 2000, I think my salary went up to 50,000 or 40,000. And when I left that company, after 14 years, I was the general manager of the company. I was looking after the entire structure of the company, almost like a CEO. I think my salary level was almost 1 lakh at that time in 2002. Then I became CEO of another company and I was there for very brief period of about 14-15 months. The salary went to 18 lakhs per year in 2003. Then after that, I became an entrepreneur and I started getting regular income. That was a business income and it rapidly went up. Initially, it was little less, 1.5 lakhs, but it went down into several lakhs. And till such time in 2021, I started merging my company with another company. Till that time, my business income was quite substantial. So I could re-up good benefits more because of my income as well as my saving and choosing the right product.
Can you walk us through your wealth journey? Like, did you have a specific financial goal in mind when you started off?
Unlike current terms, when you're talking about goals and all that, I know that money saved is good. So I used to save money in equity. In those time, IPOs, initial public offering used to be very popular. So I used to invest money. Then I slowly started looking at secondary market much later. So I would think that my starting process was IPOs, buying good companies and then leave it as it is.
So how did you start investing?
See, those days in 1984, getting an English business paper like Economic Times is very, very tough. It used to come next day only. And that also, one copy will go to our general manager's room. And during lunchtime, I used to request his secretary to give me. And she will say 20-30 minutes, she'll give me to read the paper. So quick lunch I'll have and I'll read the newspaper every day. That habit helped me a lot. The crux of the story is spend time on reading paper, attending investor awareness program, seeing business channels, little bit here and there, and association meetings. All these things will help you to groom you as a wise investor, as a smart investor. Ultimately, a retail investor has to become a wise investor and smart investor. For that, these qualities are important.
When did you make your first crore? Like, and how did it happen? How old were you?
It took a long time to create 1 crore wealth. I think it was in the year 2000. After the Ketan Parekh scam, I realized that I had 1 crore of rupees. There is a phenomenal growth from what I started, but I thought there is a good money at that point of time. And I used to tell my brothers and say that 1 crore has been created, and it's a big number at that point of time. I never had any uh, goal or any corpus in mind while investing. I only know that I have to keep saving money and putting maximum money in equity. That is, these two things were very clear to me. So after my work in Mysore and Coimbatore, when I came back to Chennai, it gave me little more focus on investment into stock market because Madras Stock Exchange was there, and where I could associate myself with an association of investors called Tamil Nadu Investor Association, where I also became one of the, I would think that one of the founding members at that point of time. That was in the year 1990. So I have seen many investors coming into the investing public and talking about their experiences, good or bad. So I also used to think that investing in equity as an asset class is important, and we need to help others who want to earn money from stock market. That's how the association was brought about.
So, what are the key factors to consider while investing in equity?
Like you said, I always used to have focus on long term, and I always used to say that money cannot be made overnight, and you cannot become rich overnight also. So it means you have to cultivate some good habits and financial habit especially to make yourself rich at some point or other. So these things are very clear. So while investing in direct equity, I used to lay emphasis on integrity of the promoter and how the company is run, whether the company is profitable, whether the company is growing. All those yardsticks I used to measure before I deploying my money in IPOs. Same thing holds good for secondary market as well, but sometimes here and there I would have made few mistakes. Always used to say, tell people that if you're ready to wait now, even today when your Sensex is 80,000 rupees, nobody expected it to become 80,000 from 100 when it started in 1979. 800 times it has grown. A lot of questions come about whether it will cross 1 lakh. My own feeling is it will double from here again in maybe 5 6 years time. But when, I don't know, but it may not be in straight line also. So 80,000 to 1 lakh 60 is possible, and it will compound because the two elements which I look at is the company's growth and company's profitability growth. If these two continue to grow, your wealth will keep accumulating and compounding. So the compounding business will continue if you are in the right asset class at the right time. So I don't think you should unduly worry about, but I know that this will help you to have financial independence.
How do you choose companies with good governance? Like, are there any metrics or signs that you look for in particular?
One thing is for sure that promoters' interest and involvement in any company makes it really grow faster, and they will be able to, focus on the company's growth. So the product should be good, the company should be good, the corporate governance structure should be in place, and profitability should also be good. So that's how I used to look at some of the companies, growth oriented companies in India, and to majority of my extent my emphasis was onto that only. And if the company is able to give dividend regularly, and if they're able to deploy their profits for their expansion, then I was quite happy about that.
With the current corpus that you've built, could you tell us more about the asset allocation? Would you have a number in mind with regards to like what percentage it might be?
I would think about 80% in equity, and about 10% will be in my real estate, and the balance will be mixture of that PPF and a little bit of gold. So 100% will come into that. The equity market is able to take you so many times, from 1 crore to many crores, multiple crores over a period of time. It's a phenomenal growth because I was waiting for the market to give that kind of returns. And the power of compounding, which is there, it helps you be in the right product and measure the amount of risk you can take.
So you had mentioned about investing in real estate and having only 10% of your asset allocation. But do you think people should be investing in real estate? What are your thoughts on that?
I always feel one good house to live is a proud moment for anybody or any family. So you must have one good house to live. For a common investor whom we are addressing, one good house to live is more than enough, and they should not have any kind of attachment to anything else. So they should have liquid money available all the time, so that you can do what you want. So tomorrow some function you want to attend, you can just deploy your money. You want to go abroad, it is possible to redeem some money and go abroad. You want to buy a car, it's possible to do something. So the objective being, be liquid all the time.
For a common investor, should they be considering SIPs or lump sum investing?
The first and foremost, when you have money, invest the money. That is the starting point. And if you are having a salaried income, allocate 32% of your income into systematic investment plan. Over and above that, if you are getting bonuses, definitely you must invest in a good equity fund and allow it to grow for next 5, 10 years or 15 years. My own feeling is, if a startup, somebody starts at 25 years, boy or a girl, and run it for 25, 30 years, they'll have a big corpus of 3 crores, 4 crores, just like that, without any effort. The effort is being disciplined and have a financial good habit, and don't disturb the boat. Allow it to grow. So creating 3, 4 crores or 5 crore today is not a problem at all for anybody. Earlier people used to say crore means they will think that they have come from sky. Here is an opportunity for you to become a crorepati. All you need to do is put 10,000 rupees per year for 20 years. You'll have 1 crore or 2 crores. It is possible to grow the money just like that. But we are not ready to wait. That's a problem. We are not ready to allow the money to grow. We take out the money in bits and pieces. That's how our wealth creation get disturbed.
What would you say is the biggest mistake you made on your own personal investment journey?
I've also made quite a few mistakes, but I didn't take the money and bought a land or bought a gold or anything like that. But sometimes, 1 or 2 shares I might have sold, which has grown very big at that point of time, which could have made me quite phenomenal. For example, I think I bought a share for about 20 rupees, one software company called Visual Soft. It went on to touch 10,000 rupees later on, but somehow or other I missed the bus of selling it. I had only 200 or 300 shares, but I didn't sell it. But later on it came down drastically, and then I had to sell it in between. So that was a costly mistake which I was made, which you could have made you far more richer today. Likewise, few shares which I know will go up, but somehow or other, because I never believe the stories, but somebody used to come and tell me that you have to buy this share, but I did not buy. That time the price was only 100 rupees or something. It went on to become 21,000 rupees. Then even at 5,000, 6,000, he used to tell me you have to buy the share, but I didn't buy it. It's not the finest of the companies I know, but it went on. Even today, it is about 300 rupees or 400 rupees or whatever it is. But some mistakes happen. But two important things here is, sometimes it helps to hear some views of others, but many times getting opinions, not relevant, maybe put you in trouble. Like Visual Soft, I did not sell because I gave the order to the seller, to the broker. Somebody came and overheard me and said, "Don't sell it now, it will become 15,000." But I thought he's a very, very knowledgeable man, and I kept quiet. But his advice was absolutely unwarranted at that point of time. But he indulged in overhearing me and stopped me from selling. So, likewise, this gentleman who came, he gave me advice. So, I thought, why should I take a chance?
In your journey, have you involved your family in the financial decisions?
My wife is fully involved in everything. Every meeting she's there, and all investor awareness program, to my knowledge, she's attended the programs. Even recently conducted one in Chennai and Coimbatore. She was present for those meetings, and she takes active interest. And being she has worked in corporate, so she knew exactly that equity can deliver far higher returns. So she is in agreement with me, and she also has fallen in line with me that this fixed deposits is not the right route to take it. So she is aligned, and she is 100% aware, and she makes sure that we hold 50-50 in everything, whether it's real estate or share, and she's clear about everything.
So, what's your one golden rule for wealth creation?
My opinion, when you are young, you have to invest in equity, and you need to consult the right person and have a trustful person and go along with him. Don't, in the name of diversification, when you are 25 to 35 years, put money in fixed deposits or buying gold. It is not the right method to do it, because both just about inflation beating gold can beat inflation, but fixed deposits can never beat inflation with the taxes on. So it's always better to be with equity market only. And if you are able to do it, then you are doing wonders. And I make sure that my nephews, nieces, and everybody in this wealth creation exercise I've been able to bring. And I want to help as many as possible. In fact, you'll be surprised that even a person with 10,000 rupees salary, I tell them to invest 1,000 rupees in SIP. And after 5-6 years, he came and thanked me for creating a good amount after 5 years. And I have got a lot of things like that. When I used to go for investor awareness program once in Coimbatore, one of my taxi driver, he said, I listened to your lecture, sir. Now I want to invest. He started with 500 rupees. Those are the investors I want to really help to create wealth. And even today, he's continuing SIP, and he talks once in a way and says that I'm very thankful to you for putting me into this. So, each and every one who is viewing this video, I want them to look at this more constructively and look at creating wealth. And wealth creation is the easiest exercise by deploying your money in a product which can give you in a nice 12-13% return over a period of 20 years. The two things again I repeat is long term and patience. And if you are able to overcome these two things, you are the master.
Thank you, Mr. Nayan, for joining me today and sharing valuable insights and about your wealth journey. It's been a pleasure having you on Money Skills by Scriptbox.
Thank you, Anand.